Hello everybody, welcome back to Young Bull Finance. Today I'm going to be giving you guys a 3-month update of my stock portfolio. So if this is your first time seeing my channel, I am a soon to be graduating college student. I've been investing for 3 months, literally 1 week before the stock market crashed due to the virus. I was when I started investing, so not the best timing. However, I've started, it's been 3 months, and here's what I got. So my current portfolio value is $1,312.50, which is actually $41 in the green, about $41.40 in the green, up 3.26%. So as you can see, if we go to, let's just click 1 year here, I've put in 1,271 bucks. So I'm in the green. The market's been rebounding a little bit after the virus. I've actually put a lot of money in before it started rebounding, so I kind of bought the dip a little bit, and that's why I'm in the green. If you've been investing for years, you might be at this point almost in the green or still very in the red, depending on what you allocated in your portfolio. But I'm going to go ahead and share the companies I bought this month. So one of them being LTC Properties. Now you may also see that, before I get into that, you may also see a lot of the companies I just have one share in. Since I'm young and I don't really have a whole lot of money to be throwing into my portfolio at once, I decided instead of buying a whole bunch of shares of one company, I went to diversify first. So I'm kind of planning out which companies I'm going to hold. I'll buy one share just to kind of set the starting path, kind of plant the seed of how I'm going to diversify my portfolio. And down here on my watch list, obviously I got some more companies I plan to buy in the future once I get more money. But yeah, a lot of these companies I just have one share. I wanted to diversify first, know what companies I'm going to buy before I started dumping a whole lot of money into my portfolio. I believe this is, I don't want to count right now because that'd be very boring, but I believe this is 15 different companies. I plan to have maybe 30 different companies. 30 is a pretty well diversified portfolio. You don't really, anything more than 30, you're really not doing, you're really not diversifying. You're really not, how do I say that? You're really not adversing any more risk than you would be at 30. 30 and 500, the S&P 500 has 500 companies, Dow Jones Index has 30, and they yield about the same. So that just gives you an idea that you really don't need more than 30 companies. And plus, the more companies you add, the more chances you're going to have a company in your portfolio that starts doing well. And plus, it's very hard to keep track of, say, 500 companies, 100 companies. As the 30, you can keep a really close eye to each of them. So anyways, as I get into that, this month I bought Aflac, Pepsi, Main Street Corporation, Coca-Cola, and LTC Properties. So I'm going to go ahead and get into LTC Properties here. They are a real estate company. Their dividend yield's about 6.3, which is pretty good. I'm actually, to start my portfolio, I'm going to allocate most of it to real estate. Real estate tends to have higher yields than the rest of the market. It's a little bit more risky, but one good thing right now is real estate, due to the virus, was one of the hardest hit sectors of the market. So real estate stocks are cheap, and personally, I think, now you don't sue me if I'm wrong, but personally, I think the market will be rebounding soon. It seems like stuff is opening back up. It seems like things are getting better, and I think that real estate companies are going to start going back up in value. So anyway, you can get them for a cheaper price. They tend to have higher dividend yields. I plan to have my dividends, by the way, I only have dividend companies in here. I'll never buy a growth stock or anything like that, just dividend. I plan to have my dividends funding my portfolio as well until until there's like $1 million in here and I can actually make a living off my dividends. But for now, they're going to be funding my portfolio, and best way to do that is to have higher yields. There's a little bit more risk with a higher yield, obviously. One of the golden rules of finance: the higher the risk, the higher the reward. So I plan to have probably 15-20% of my portfolio to be real estate. LTC is going to be one of the companies in there. As long as Simon Property Growth, we have, I think this is Realty Income, yes. And we have Welltower. I think Welltowers is like retirement homes and such. And I have NRZ up here. I think they just buy mortgages, I'm pretty sure. I haven't really done a whole lot of research on this company. They were just paying a really high dividend. Right now their dividend yield's 286 because they cut it during the virus, but before it was insane how much money this company was paying out. And I also have Store Capital. They buy real estate and stuff like malls and just, strip malls, stores, name speaks for itself. But then I got Coke and Pepsi here. So I bought 2 soda companies. I actually like Pepsi a whole lot better than Coke, which is surprising because if you go by the product, I'd say more people prefer Coke. But I don't know. Pepsi just seems like a better company. It's not just, they don't just own Pepsi. They own, I think, Taco Bell and Mountain Dew and Frito-Lay maybe. Don't quote me on that, but they have a really diversified business strategy, and I mean, I don't think Pepsi's going anywhere anytime soon. All these companies I plan to keep for a while. I have Main Street Capital here. It kind of works like a bank, and they pay a super high dividend. So this is a finance company. I actually don't know a whole lot about this company. I just bought one to kind of keep an eye on it, and I was hearing some good things about it online. So I thought, why not buy one? I'm already up $3 on it, but that's just unrealized value. That's not a dividend. And then I bought Aflac. Very good company here. Very consistent dividend. Very consistently growing their dividend each year. And a 3 yield, that's pretty common for a company like that. And that's pretty much what I bought this last month. And so far one of my favorite companies I've held is AT&T here. They pay a really good dividend. They're really safe. If you look up them on Seeking Alpha or any website where you can check companies' performance, AT&T is just one of the best companies you can buy. And that's about it. I bought some good Disney stock. My average cost was $84, and now it's worth $118. I bought this super low. I mean, I knew Disney was going to be fine, and I wish I had more money. I mean, the whole story of my portfolio is right now, I wish I had more money when it crashed. Man, during a time like a recession, this is just a tip. During a recession, having money is infinitely more valuable. There's a lot of people that don't have money, and there's going to be a lot of people that need money. You will be paid so much more for your investments during a recession. Because think about it. I bought $80 before. I think Disney was $150. So we'll just round it up. We'll say before it was double the price. The price got cut in half. So say I was able to buy 100 shares of Disney, but before the crash, I'd only be able to buy 50, right? Because before the crash, I would only be able to afford one with how much money I had here. Obviously, I only had $160. So I was getting 2 for the price of 1. And that's over time, that's going to be really, really valuable to get a discount like that. So anyways, this is my portfolio update thus far. I hope you guys enjoyed the video. Please leave a comment if you have any questions, recommendations, anything you want to say about my portfolio, anything you want to say about your portfolio. Like the video if this helped you out in any way, and please subscribe to my channel. I have more finance videos coming soon, portfolio updates, and so on. So thank you guys for watching, and I'll see you guys next time.